Hey everyone, welcome back to Corporate Decoder. Today BKR just filed its latest Form 8, and I'm seeing one big signal about their financial health. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company announced its quarterly results, and it looks like they are making some smart moves with their debt. We are looking at the 23rd of April filing from Baker Hughes Company, a major player in the energy sector. They are reporting their first quarter results for 2026. This is a pretty standard update, but there are a few key things we can pull out that give us insight into where the company is headed. Baker Hughes is a big name, and they are involved in a lot of different areas within the oil and gas industry, from equipment to services. They have a substantial market capitalization of over $68 billion, a price to earnings ratio of around 22, and employ about 56,000 people. This filing touches on various aspects of their debt, specifically detailing different series of senior notes. For instance, we see details about their 4.737% senior notes due in 2046. These are essentially loans the company took out that they promised to pay back with interest by that year. The fact that they are listing these out shows a pretty active management of their financial structure, especially their debt. Baker Hughes Company stock, ticker symbol BKR, is listed on the Nasdaq stock market. They also have various other securities like different series of senior notes also trading on the Nasdaq. This filing is bringing us updates related to their financial condition and results of operations, which often comes out in their quarterly reports. The company is not an emerging growth company, meaning it has to follow the full set of reporting rules for established businesses. This also means they are not taking advantage of any extended transition periods for new accounting standards, which implies they are confident in their ability to keep up with the latest financial reporting requirements. The main purpose of this filing is to announce their financial results for the quarter ending the 31st of March 2026. They issued a press release on the 23rd of April, and that information is being filed along with this report. Now, it is important to note that this information, while being released publicly, is being furnished and not technically filed in the same way a full earnings report would be. This means it doesn't carry the same legal weight under certain sections of the Exchange Act, but it still gives us a great look at their performance. So the company released its first quarter earnings on the 23rd of April. This press release, which is part of this filing, details how they performed financially in the first 3 months of 2026. This is where we get the core numbers that tell us if they are growing, shrinking, or staying steady. Following this announcement, Baker Hughes is holding a conference call. This is a common practice for public companies to discuss their earnings in more detail with investors and analysts. They will be holding this call on Friday, the 24th of April, just one day after the press release. This call will be available online via a live webcast, which is a great way for anyone interested to tune in and hear directly from the company's management. They also mentioned that an archived version of the webcast will be available on their website for a month, so you can catch up if you missed the live event. This section, Regulation FD Disclosure, essentially means that any material information being shared should be made available to all investors at the same time. The company is using this section to point to the same press release we just talked about, ensuring transparency in how they communicate important financial news. Again, this information is furnished, not filed, meaning it is for public awareness, but with those specific legal distinctions. This is just a cross-reference telling anyone reading the document that the relevant information for this section can be found in Item 2.02, which is of course the results of operations and financial condition. It is all connected, designed to make sure all the necessary details are presented clearly. Here we have the exhibits, the attachments to this formal filing. Exhibit 99.1 is the actual news release from the 23rd of April titled, Baker Hughes Company Announces First Quarter Results. This is the primary source of the information we are discussing. It is the direct announcement of their performance. Exhibit 104 is the cover page interactive data file. This is part of the modern way companies file their financial information electronically. It is designed to make the data more accessible and easier for computers to read and analyze, which is great for researchers and investors who want to dig into the numbers quickly. And finally, we have the signature block. This is where the authorized representative of Baker Hughes Company signs off on the report, confirming that the information provided is accurate and complete to the best of their knowledge. Fernando Contreras, who holds the title of Vice President, Chief Compliance Officer, and Corporate Secretary, has signed this document. This signature adds the official seal of approval to the filing. Looking at the broader context, Baker Hughes has been making moves to strengthen its balance sheet. Recent headlines like Baker Hughes jumps as Q1 results highlight record IET orders and a stronger balance sheet after portfolio moves suggest they are actively managing their assets and debts to improve their financial standing. The company's stock saw a positive reaction, as indicated by why Baker Hughes. BKR's stock is up today, and Baker Hughes Company stock outperforms competitors on strong trading day. This indicates that investors are responding well to the news and the company's direction. When we look at their debt structure, like the various senior notes mentioned, it is important to understand that companies use debt to fund operations and growth. Baker Hughes, being a large industrial company, will naturally have a significant amount of debt. The key is how they manage it. A P/E ratio of 22 suggests that investors are willing to pay 22 times earnings for the stock, which is a fairly standard valuation in the energy sector. The fact that major institutions like Vanguard and BlackRock are significant holders holding over 26% of the company's shares combined signals confidence from large, sophisticated investors. The news about record IT orders implies their integrated engineering and technology segment is performing very strongly. This is a positive indicator for future revenue. A stronger balance sheet is crucial for any company, especially in a cyclical industry like energy. It means they have more financial flexibility to weather economic downturns and invest in new opportunities. What I am seeing here is a company that is actively working to optimize its financial position. They aren't just earning money, they are smartly managing their debt and investments. The focus on a stronger balance sheet, coupled with strong order books, suggests a company that is preparing for both present stability and future growth. The risk I am watching is how effectively they will navigate the inherent volatilities of the energy market, but their current actions appear to be prudent. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. You can also join our Discord in the description.